Week of 2015, the holiday mood is quite palpable across dealing rooms, not just in India but around the world. Volumes are thin. Nonetheless, it's a full working week for us, at least here in India. So let's get you all prepped up for tomorrow. This is Markets Forward, and I'm Surabhi Upadhyay. Let's start with a quick recap of what we've seen on the street today. So if you're just looking at the numbers and that picture, it was a very pretty one. Lots of green on the screen. No unsteadiness, no unease, no choppiness, no volatility. It was a large cap day, and some strong buying led to what was a pretty good picture for the Nifty and for the Sensex. Those indices managing to scale certain historic marks or markers in terms of 7,900 and 26,000 respectively. We were outperformers, and when we were trading, the Chinese market was actually quite jittery. It ended down to 2.5%. Because of that, some pressure on metal stocks, but barring that, most of the sectors actually outperformed. We had great buying interest in the likes of banking, in the likes of pharma, so there was no complaint really. The other caveat in terms of today's action perhaps could be the fact that it was only a large cap driven rally. The mid cap market completely fizzled out today. That index absolutely ending flat, almost unchanged. So that was a bit of a concern, and of course the fact that volumes are really thin. On that note, let's welcome in our market expert Nitin Raheja of AQF Advisors is joining in. Nitin, good evening. Good to have you on the show as always. Now, I mentioned a couple of caveats there when we were recapping today's action, which is why my first question to you is how much can we read into what we've seen today's up move?
Well, I would actually not read a lot into the up move, because, my own view has been that these markets are trading in a range and will continue to do so for some time. And that's primarily because if you really look at the markets, there are a couple of things which have moved for the markets in the shorter term. That's been the fact that all the big developments at all, whether the Fed hike is behind us, the RBI policy is behind us. So in that sense, also, a lot of the FIIs are, gradually petering down the business for the year and are on a holiday season. And this is traditionally a time when you do see some sort of a year-end rally. However, against that, I think what you need to see is that there's this big concern globally on China that is emerging more, which is now kind of overshadowed the whole Fed interest rate issue. And more importantly, in my own view, is the fact that our own economic recovery is showing that it's more of a long drawn affair. You're really seeing corporate earnings being tepid, and I think primarily my own view is the reason we are trading in this range, and we've been doing this for a very long time now, is that the market is looking for solid positive cues in the form of fundamentals for it to break out of this range. And I think in my view, irrespective of what happens globally, I think if you see earnings will be the key driver as far as our markets are concerned, for them to break out comprehensively of the use.
Nitin, you mentioned trading range, and you think we're still in that range. So define that for us. What are we talking about in terms of the downside and perhaps the cap?
So, while you will have, shorter term ranges happening from time to time, I really believe that it's a much more broader range that we have seen the markets peter between, and that is anywhere between 7,500 to 8,000 odd levels as such. So I think that's where we are and have been for some time. Within that, sometimes you create a narrow trading range more towards the upper end of the band, and sometimes you move downwards. But if you really step back and see where the markets have been for the last many months, this is practically where we are.
Okay, on that note, let's quickly run through today's fund flow picture, and it's a pretty interesting one. Well, we've seen fairly impressive buying by domestic investors today. DIIs bought stocks worth nearly 1,000 crore rupees in the cash market. FIIs, as expected, were on the sidelines. They remain net sellers. They sold equity worth 302 crore rupees today. That brings us to the point about FIIs being on holiday, Nitin. What do you make of the fact that domestic institutions have been consistently supporting this market? Not that it's been enough. Would you expect any trend reversals on the flow picture when we get into, let's say, the first week or the second week of January?
Right. So I think if you really see what's happened in this market for the last 1 year, while this market has actually has come off from the beginning of the year, and has practically given flat to negative returns if you were to see this whole calendar year as such. But a lot of the action has been more bottom up, more mid cap and small cap oriented. And so you've seen a lot of investors actually wanting to play that out, and so you've seen domestic institutions seeing good amount of inflows, especially in equity mutual funds, and that's what's really accounted for persistent buying as far as DIIs are concerned. They are local fund managers. They understand stock specifics, which are often not even on the radar of the FIIs better, and that's where the whole action has been, and that's why, because of their good performance in this last calendar year, you're seeing more and more money flow towards them. As far as going ahead is concerned, I think the broader trend of the FIIs, if you really look, while they have been sellers for a lot of this year, the quantum in relation to the amount of money that they have bought in is not really that big. So I would think that at least till you don't see the earnings skew change and this whole global macro fear over China dissipate a bit, I don't see the FIIs coming back in a very big way. And I think this trend will mean that the markets will meander around here for some time.
Since we're talking flows, let's quickly bring you up to speed with what happened on Mint Street as well today. The rupee gained for the 8th straight session, up around 2 paise against the dollar. So it's not much of an up move, but at least it was positive close. The rupee, which touched an intraday high of 66.08, ended the day at 66.19. The strength in the rupee comes on the back of sustained dollar selling by banks. Nitin, you mentioned earnings, so let me come back to that. As we're getting into the third quarter reporting season, what would you expect? And again, just in terms of trends once again, do you expect mid-caps to perform much better? Do you expect that mid-cap-centric buying action to continue as we step into the new year?
Yes, my own view is that this whole focus on so-called bottom-up is going to continue. I think it's and by that nature, since the mid-cap universe is a far larger universe in terms of number of companies, a lot of these companies are doing far better. And even the latest RBI report that came out actually highlighted the fact that a lot of the banks are at risk from some of the larger borrowers, and hence that's one part of it. The other part of it is that since global cues are weak, all companies and some of the large Indian blue chips are now more global in nature than domestic oriented, are suffering that. So I think overall you're seeing that pressure on large caps continue. And as you go into the earnings season, I think you are going to again see the mid cap and small cap really focus. However, a note of caution: some of them are trading at valuations which are very, very fair, and even if there is a marginal disappointment, you can't rule out a sell-off.
Okay, let's focus on two stocks from the telecom sector that were clearly in news today, and both of them ended negative. Bharti Airtel and Idea both saw cuts between 1% to 2%, depending on which stock you were looking at. And it seems to be all about Reliance Jios' much anticipated entry. We had that blitzkrieg of a ceremony on Sunday announcing the entry. It's of course only for employees right now. A full-scale rollout is expected by March to April of 2016. The impact was already evident on some of those stock prices. So Nitin, what's the sense? I mean, this has been a much anticipated event. Is it going to be a game changer for the telecom sector? In which case, what would you advise on telecom stocks now?
Well, I mean, clearly, it is expected to be a game changer, and you've already seen, one of the largest companies in the segment, Bharti, preempt them by announcing a large capex program to beef up their data-oriented services and so on and so forth. So I think what it's really going to do is a couple of things. If you see the telecom companies, they seem to be recovering and showing back earnings momentum post a bruising price war in voice, and data was the saving grace. Now you have a new entrant who's threatening to again upset the apple cart and come up with aggressive pricing. that is going to put pressure on a lot of these companies wanting to retain market share, and so pricing of data is going to come under pressure. So you have a scenario where a lot of these people have paid prices to acquire spectrum in the last auction. You have their business coming under pressure in terms of pricing and so on and so forth. So I think I continue to believe that the telecom stocks are probably going to underperform till you don't see clarity in terms of what's going to happen post the launch of Jio.
Okay, standard disclaimer here. Of course, RIL, the promoter of Reliance Jio, also controls Network 18, which owns CNBC TV 18.